Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. All right, it is 12/12/2022, 10 p.m. on a Monday. And because 2022 wasn't weird enough, things are threatening to get weirder. Because the U.S. Department of Justice is considering criminal charges against Binance and its executives, including CZ. Now, prosecutors have reportedly discussed plea deals with Binance's lawyers. The investigation began in 2018 due to cases of criminals using the exchange to transfer illicit funds. Some prosecutors believe more evidence is needed before a criminal case can be filed, causing a split within the department. For their part, Binance has denied the allegations in a Reuters article. The exchange's global head of intelligence and investigations, Tigran Gambaryan, said that Binance has responded to over 47,000 law enforcement requests since November of last year. A Binance spokesperson added that regulators are conducting a sweeping review of crypto companies, and that Binance has shown its commitment to security and compliance through large investments in its team and technology. Gambaryan also stated that Binance has increased its security and compliance headcount by over 500% and has possibly the strongest team in the financial sector. Meanwhile, John Reed Stark is a former SEC regulator. Now, he's called Binance's recent proof of reserves a red flag. He said it does not address the effectiveness of internal financial controls or express an opinion or assurance conclusion and fails to vouch for the numbers. In legal terms, an assurance conclusion is when an auditor evaluates the evidence, and then they offer their conclusion about whether the sources are free from misrepresentation. Stark worked for the SEC for 18 years, and he founded the Commission's Office of Internet Enforcement, and now he serves as president of his own cybersecurity-focused consultancy. He's also an adjunct professor at Duke School of Law. Now, Stark has also criticized other companies within the crypto ecosystem. He called Tether a house of cards and a Ponzi scheme. He cited evasion, deflection, and a lack of responsiveness. Stark has questioned why Binance, which is a sophisticated and a well-capitalized company, chose Mazars instead of one of the big four audit firms. He also mentioned how Mazars performed, quote, agreed-upon procedures that were requested by Binance. That said, they didn't comment on the appropriateness of the procedures in the documents, and Stark compared this to bringing someone to your house to inspect it for fire safety, but not knowing if their inspection procedures were any good. Stark said that Binance shoots themselves in the foot when calling these documents audits. This comes after audit, tax, and advisory firm Mazars concluded that Binance controlled in-scope assets in excess of 100% of its total platform liabilities. Mazars reported a 101% collateralization ratio for the Bitcoin in net customer balances. Stark is not the only one to criticize Binance's recent efforts to verify its balance book. Jesse Powell, founder and CEO of Kraken, said the report showed, quote, either ignorance or intentional misrepresentation, and he said, the statement of assets is pointless without liabilities. Now, Binance has introduced a Merkle tree system to verify its financial footing after FTX went under. Now, a Merkle tree is a cryptographic tool that consolidates a large amount of data into a single hash, which Binance claims allows users to verify their Bitcoin. Now, speaking of FTX, because you knew we were going to, right? It's weird that this is happening to Binance right now after FTX bit the dust. It's especially weird given CZ's role in that takedown. Anyway, surprising absolutely no one, Sam Bankman-Fried says that he will testify before the House Financial Services Committee. And surprising absolutely no one, he said he will do so remotely. Citing safety concerns, he said, quote, I'm quite overbooked and was not planning to be testifying until, very recently. From a security standpoint, it's very difficult for me to move right now and travel because just like the paparazzi effect is quite large. Now, this comes after he failed to confirm his scheduled appearance before the Senate Banking Committee, knowing that he could be subpoenaed. So Sam was in a Twitter Spaces with Unusual Whales when he told the 60,000 people present that he would testify tomorrow, but he would be doing so remotely. This is after he was scheduled to appear in person. That's when he confirmed that he would not be attending the Senate Banking Committee at all, but that he would meet with the HFSC virtually. During the interview, he didn't provide satisfying answers to anybody's questions. For example, when he was asked about the backing of tokenized stocks on FTX, he said he believed they were one-to-one, but he would have to check. He also said that his upcoming testimony would likely be underwhelming. At present, he's located in the Bahamas. And like I said, he failed to confirm that he would be making his meeting before the Senate Banking Committee, even though he knew he could be subpoenaed, which to me would call into question the decision to appear remotely. Unless, of course, for some reason he can't or won't be subpoenaed, or that subpoena won't be carried out, and he knows it. At any rate, SBF's been quiet on Twitter lately. Might be something to do with his new criminal attorney, because I tell ya, he was quite the social media butterfly, appearing on a number of podcasts in addition to traditional media. Sam has expressed interest in starting a new business to pay back the customers he owes money to. He told the BBC that he wants to do right by FTX users and will be thinking about what I can do for them. Because, as we know, Sam's exchange may have over 1 million creditors. Estimates are of the potential losses ranging from $10 to $50 billion. SBF also repeated his previous statements that he did not knowingly commit fraud. John J. Ray III, also the new CEO of FTX. Now, he disagrees with SBF's claim that FTX US has enough funds to reopen user withdrawals. Ray also discussed the structural issues that caused the company's collapse. This was in a statement before appearing before the House Financial Services Committee. Ray explained that all FTX Group companies were included in the Chapter 11 filing because FTX US was not independent from FTX.com. He also outlined the issues with FTX's relationship with Alameda Research that contributed to the collapse. He said, quote, "Questions have been raised as to why all the FTX Group companies were included in the Chapter 11 filing, particularly FTX US. The answer is because FTX US was not operated independently of FTX.com. Chapter 11 protection was necessary to both avoid a run on the bank at FTX and to allow our team time to identify and protect its assets." Now, Ray confirmed something that we already know, that customer assets from FTX.com were mixed with assets from Alameda Trading Platform. He also mentioned that senior management had no restrictions on access to private keys. Other issues with the relationship included Alameda's risky margin trading and unrestricted borrowing from FTX's deposits. This is in addition to FTX's investments and loans to insiders at both companies. Additionally, Alameda's market making left customer assets on external exchanges globally. Unfortunately, Ray is going to have to testify before Sam's virtual appearance. As I said on Twitter, I would much rather have Sam go first. That way he doesn't get to hear what Ray has found out before he gives his own testimony. I don't think he needs the advantage. Now, Ray discussed the failures of corporate controls at every level of the organization. This made it difficult to diagnose the situation, including incomplete documentation for many transactions. And these are transactions involving FTX Group funds and assets. SBF has disagreed with Ray's criticism of the company's corporate controls in multiple media appearances since the collapse. Ray stated that he will not discuss certain subjects, including communications with Sam and other ongoing legal proceedings. These include investigations from U.S. law enforcement. However, he addressed many concerns regarding FTX, including the division of its global and U.S. branches. It's uncertain if SBF will testify before the Senate Banking Committee on Wednesday. I don't think he's gonna, though. Now, another disgraced crypto personality that can't go home right now is Kwon. Right now, South Korean authorities believe that he's in Serbia. In September, a Seoul Southern District prosecutor issued an arrest warrant against Kwon for allegedly violating South Korean capital markets laws. It is thought that he was in Singapore before moving to Dubai in transit to a new location. The South Korean Ministry of Finance is requesting cooperation from the Serbian government. Serbia is not among the 31 countries which South Korea has a bilateral extradition treaty with. That said, it is a signatory to a multilateral treaty with the Council of Europe. Goldman Sachs stated in a research report that the failure of FTX is a common story in financial markets and does not indicate a problem with blockchain technology. Instead, the lack of regulation around the point of trust, where money is exchanged on a futures return, that's what's to blame. This report also noted that the recent crises in crypto markets follow a similar pattern of unsophisticated investors seeking instant wealth. And we saw a lot of that during the bull run. People waving their credit cards at exchanges without doing any research. Now, according to Goldman Sachs, new financial instruments are lightly regulated because they are not covered by existing rules. Regulators have not yet identified the potential for harm. This is the reason why the recent crypto bubble had more widespread fraud than the dot-com boom, which occurred in a well-regulated equity market. They also emphasize that regulation is necessary at the point of trust where money is exchanged based on a future return, specifically because this is where the opportunity for fraud arises. Goldman Sachs believes that cryptocurrencies will continue to thrive despite the recent crises of 2022. In order to access the market, investors must go through a gatekeeper, such as a crypto exchange like FTX. These institutions often attract speculative investors who are willing to give money in hopes of getting rich quickly. Goldman believes that the key to the success of cryptocurrencies is for rule makers to properly identify what to regulate. In the case of crypto, the point of trust is more important than the trustless blockchains themselves. In fact, what they said was, once the financial features of digital assets are sorted out, regulators should not interfere with the blockchains themselves. Goldman Sachs stated in a report that when a token is used as a financial instrument, it should be regulated like other securities. Because this is the case with Terra's UST stablecoin, which was lent out on Anchor for a 20% yield. Until regulators can classify which tokens fall in this category, the opportunity for fraud in crypto will persist. The report also noted that decentralized financial lending systems do not pose the same counterparty risk as traditional banks. That's because in DeFi lending, collateral is visible to all members of the pool and is automatically liquidated if the value approaches the value of the loan. Smart contracts can also be used to retrieve collateral without the need for court proceedings or at a discount to the loan. It just seems right to me that this is a reminder of the importance of regulation in the financial markets. It also highlights the need for investors to be cautious and well-informed before investing in any financial product. Crypto mining firm Argo blockchain has suspended trading on the London Stock Exchange and Nasdaq. The company said that it had been negotiating to sell assets and engage in an equipment financing transaction in order to avoid bankruptcy. Argo blockchain also announced that it was at risk of running out of the funds needed to continue operating within a month. The suspension of trading was due to a, quote, inadvertently published material relating to company's financial situation. Subsequently, Argo blockchain has resumed trading on the London Stock Exchange after it was suspended on December 9th. Argo's shares closed at 69 cents on the Nasdaq and 6.7 pounds on the LSE on December 8th. The company said that it is hopeful that it can avoid bankruptcy, but that there is no assurance that it can. Argo has requested that the UK Financial Conduct Authority restore the listing of its ordinary shares, and it's expected to happen soon. Argo said in October that it was at risk of becoming cash flow negative in the near term unless it raises the capital needed to continue operations. The company reportedly selling some of its Bitcoin to pay down a loan from Galaxy Digital. As of November 30th, Argo reported holding 126 Bitcoin and Bitcoin equivalents. If Argo files for Chapter 11 bankruptcy, it will be the latest crypto firm to report financial difficulties in the bear market. Regulators and lawmakers have criticized the crypto market for the collapse of several firms. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.